So, welcome everybody to Wednesday live session. I want to especially thank some of you that are very faithful and determined to attend the session. If you don't attend, what is the essence of me coming on board? And of course, I want you to know that the more I share my idea and the more we share our ideas together, the more we get better. We've got some people that have been trading for the past 30 years. They did not get to where they are, or they have not gotten to where they are today because of their own knowledge alone. They make, they go extra mile to try to know what's happening with other person, what ideas do they have to bring to the table, what areas of their trading system they think is not good enough, that they need to improve. These are ways that they have kept improving themselves over time. And today they can say that they are there. So for you to get there, you need a bit of consistency. Consistency in everything. Consistency in study. You have to read and read wide. Consistency in risk management application. Consistency in your entry rules. Consistency in your stop loss rules. Consistency in your method of chart analysis. Just make sure that everything you are doing with regards to trading, you apply consistency rule. Do not break that rule. Make sure you are consistent with what you are doing. And mastery will come with application of consistency in everything you do. Don't do this, do that, do this today, do another one tomorrow, do one next tomorrow. Some people, they have their trading system. If they have 2 or 3, losing trades, they discard the trading system and they are looking for another one. It doesn't work that way. There's no trading system that is perfect. All right. So the fact that you have 3 sets of losing streaks does not mean that your trading system is not working. Of course, I have de-emphasized, mentioning trading strategy, because the use of trading strategy have made some people not to even make anything in this market. It's trading strategy. All right. I emphasize more on trading system, because your trading system is broader and wider in scope. It will discuss your entry rule, your exit rule, your risk management rules, your trading time frame, higher time frame consideration, lower time frame consideration, decision to trade, and so on and so forth. This is a holistic approach to trading. So it's better to talk of trading system than to talk of strategy. And I've repeatedly said it, that I don't think in this market, one single strategy is enough to beat this market, because this market is smarter than anybody. You get to learn like two or three, get them, put them together. When you're analyzing, if this one does not work for this side, and other ones will work for it. And with that, your knowledge is broadened and you know what you are doing. Is that okay now? So please don't discard your trading system because you have 2 or 3 losing streaks. Okay, so I just have some pairs that I want us to take a look at. Okay, I want us to take a look at some of those pairs and see how we can be waiting to capitalize on whatever opportunity that they will present to us. Okay, so first and foremost, I want us to look at GBP CHF. Okay, GBP CHF. If you want a better information, you go to IDC. Can you see? This is IDC right here, IDC. Can you see? It's giving us a better information about this particular pair. See that, truth be told, it has a lot more room to the downside. Okay, but if we have to look at this pair critically, okay, we will see that, you will see that right here, it is a downtrend. It's in a downtrend, okay, on a higher time frame, monthly. It's on a downtrend. But if you don't look at monthly time frame, okay, if you don't look at monthly time frame, you wouldn't know that this pair still has some, possibly have some room to the downside, depending on what happened to GBP and CHF. All right, it can as well proceed to the upside from where it is, depending on the current fundamentals between GBP and CHF. Do you get now? So that's all you need to look at on monthly time frame. You don't really have to do some special analysis on it. It's just for you to view the market and look at the overall flow and the bigger, direction of the pair. So if you look at weekly right now, remember, whatever we are doing here, you should also apply it to any other pair you want to trade. Okay. Now, if you look at this weekly time frame, you will see that clearly after this push to the downside, you have a 3 waves up, 3 waves down, and then you have 3 waves up. So I want to believe that this is a WXY that is a running flat in nature. All right, it's a running flat. This is W, X, and Y. It's a running flat. Okay, and then you are having this move to the downside. Can you see? So if we are to have this push to the downside, then of course, we are done with this session of our analysis. We already know where we are going. We want to move down. So we are concerned about this piece. All right, by the time we get to daily, we are concerned with this piece. So myself, I like to use weekly to get my direction, but my real trading time frame is a daily. Daily will give me signal to get ready, but my entry can be 1 hour time frame. Okay, so now looking at the daily time frame, all right, you want to see that even from this level, that the flow of this market is to the downside, and you can see by testing this flag here with a divergence, you will see that if we check, you will see that there is no divergence. Can you see? Flow to the downside, lower low here. Here, the same thing, lower low here. Can you see? So the flow of this market, of this particular instrument, is to the downside. You can see it here. You can see low. This low is lower than this low. Then this low here is lower than this low. So if you bring it down to your indicator, you will see this low lower than this low, lower than this low, this low lower than this low, this low lower than this low. Can you see? So there is no divergence, meaning that the pressure to the upside has faded off. It's not there. And then when I prepare a course on divergence, I told you that whenever you see a flag like this that does not have, or a channel like this that does not have a divergence, but rather having a convergence, showing that the price and the indicator are moving in the same direction, I always want to identify what push break the structure. Look at the push here. This is the push that broke this structure. It is very, very important for me. And that particular push that break the structure, I want to get it retraced to my structural level. Can you see? This is the end of correction. Why do we take this as end of correction? Because you have a push up from here. If this market is to be going down and this impulse has not finished, we shouldn't see this buy pressure over here that even engulf the previous one. We have indecision candle, you have a massive buy, smooth candle to the upside. Do you see it now? So I want to look at, structural level. And where's the structural level here? You have 50 to 61.8 tentatively, because we don't know if this corrective structure will be zigzag. We don't know if it will be expanding flat. But for now, we are going to take 50 to 61.8 as, our structural level. And then we mark 78% retracement. It is only above this 78% retracement that we can put stop loss. Okay, we have at least 70 to 80% guarantee that this pullback is not going to cross this 78% fib retracement. So what do you do? Just take off this. All right, this is what we want to achieve. We want this market to come in between this area, and then it comes down. Another thing that you need to check is this area that we have identified here, guys. If we check the market to the left, are we able to spot a supply area? Oh, yes. There is a big candle here. Look at it here. Okay, look at this big candle, imbalanced candle here. And this imbalanced candle, you want to look at the candlestick to the left. And you see that this green one is the candlestick to the left. Look at the candlestick to the right. Look at where it ended here. This is a supply zone, guys. This is a supply zone. So within this area here, we expect this pair to move to the downside. Do you get now? But right now, I want to see how this pair want to navigate itself to that area. How does it want to get to that area? Already, I have seen an engulfing, candlestick pattern on a daily time frame that actually signifies a buy pressure. So what I want to check is this. I want to fib this engulfing candlestick pattern, and I want to see whether I will get a very clean corrective structure back to the structural area. Are you getting it now? I want to see if we're going to get this corrective structure back to 50 to 61.8. Okay, this level and this level. Okay, remember your 78, just below it is your stop loss. If it comes to cross this 78 and hit this level, it means that we are moving to the downside. That's what it means. Okay, so what we have to do, we have marked our levels, the levels we are expecting this market to hit. We have to go to 1 hour time frame. Why do we have to go to 1 hour time frame? Right now, on daily time frame, you cannot read the corrective structure on daily time frame. It's not readable. All right. But if you go to 1 hour time frame, you should be able to see your corrective structure clearly. Can you see? You can see it clearly. Where is the corrective structure here? Right here, guys, you have the impulse. Okay, you have 1, 2, and 3. That's the end of correction. Then you have this move to the downside. Okay, you have this move to the downside. I don't like to take trade of 20, 30 pips at times. Otherwise, I should have taken this sell to the downside. But because I know that this is probably not going to be the end of the corrective structure that's going to take this market to the downside. So since I know that, okay, since I already know that, then why do I want to take this small sell? Okay, why do I want to take this small sell? So what I want right now is to, we have defined our structural area as being marked by this black line. But I want to show you something that is very, very important now. When you mark your structural area and you get your 50 to 61.8, and you see that there's a corrective structure, there is a B wave that is being formed just around that 50 or 61.8. It means that the corrective structure that is going to be formed here is going to be a confirmed zigzag corrective structure. I don't know if somebody is getting me. Now, look at this. Look at this thing, guys. You see this impulse? You see this corrective structure? This impulse alone is hitting 50%. Whenever the impulsive leg, which is called wave A of a corrective structure, is hitting 50% of the impulse, just know that by the time correction is ended, the wave C is going to come to 78% retracement, or even above or below it, as the case may be. Do you understand now? So, and again, the priority right now is not going to be the 50 to 61.8 or 78% retracement of this impulse. The priority right now is going to be equal leg of this A wave and C wave. Equal leg is going to be of paramount importance right now. Okay, so now let's measure the equal leg and see where we want to wait for GBP CHF to take a buy. How do you measure equal legs? You measure equal legs using trend-based fib extension tools. You drop it here, take it here to the end of wave A, take it back to the end of correction. Okay, you want to measure where you have 100% extension. Look at it here. So possibly we may likely pass 78% retracement a little. Can you see? This is where you have to be very careful. This impulse, correction, impulse. All right. If this market can get to this level, then we will be happy to look for buy opportunity to the upside. Where are we targeting, guys? Remember that we are targeting inside this box. Okay, inside this box. So when you now look at the structure, you now see that right here you have a structure in the middle. You have a structure in the middle. Remember, this is just my thought, this is my opinion. This is how I want to see the market. You see impulse, you see correction in 3 waves, you see another impulse. This is 3-wave structure to the upside, and then we are expecting another 3-wave structure to the downside to hit this level. And then what next? 3-wave structure to the upside to hit this area, either 3 waves or 5 waves to hit this area. So if it is 3-wave structure like this, 3 up, 3 down, 3 up, then this corrective structure here is going to be W, X, and Y. W, X, and Y. Okay? But if instead of having, if instead of having 3, 3, 3, you are now having 1, 2, 3, 4, 5 at the end here. If this wave C here, right here, just hold on. If this wave C here is giving you 1, 2, 3, 4, and 5, then this structure become A, B, and C because it is 3, 3, 5 structure. Do you understand now? So, and by the time this market gets to this area, it has not only gotten to our structural level, but you can look at it on a 1-hour time frame. Look at the level, look at the structural level. Even you yourself, you can see, you can spot from here that this is a pure supply, okay, undiluted, no element of buy at all. It was all sell right from top to the bottom. So if we are visiting the same level, then this pair will find, enough volume to push to the downside. But before we get there, I want to believe that if this is a continuation move to the downside, it's not supposed to be corrective. Okay, it's just supposed to make a big impulse. Boom, correct at this level, pass, break all this level, correct here, and make another boom to the downside again. Do you understand? But because it is correcting here, it's telling us that we are going to have a bigger correction to the upside. Is that okay now? I'm going to have a bigger correction to the upside. So let's keep watch. Let's set alarm. Let's set alarm at, or not alarm, alert rather. Let's set alert at this level. Let's set it at 1575. Okay, setting alert at 1.1575, 1575. Okay, all right, great. So if this analysis is correct and this market get to this level, it's going to give us, an alert, and from that alert we can take decision. So IDC will give you a better information. We are on AUD NZD right now. Okay, so if you look at this pair, it like to consolidate. That's just my problem with it. It consolidates so much. You can see a very good setup, then to just end up in consolidation. But of course, you see that the move to the upside is getting, less pressure right now. You see, so everything that is happening right here, guys, is just a corrective structure. Okay, it's a corrective structure. Actually, we would love to see this wave here extend a bit to break this level. Okay, to break this level, let me show you very clearly. There's what we call trend line liquidity. Is trend line liquidity. Can you see that, for people that trade trend line, they will be tempted to look at a sell opportunity right at this level. Okay, sell opportunity right at this level. But when you understand liquidity, you see that the beginning of the trend line here, if you extend the horizontal line here, you see that in most cases, the market may want to try to break this trend line and come right here. Okay, as soon as it comes right here, guys, it's going to make a move to the downside. This is what is called trend line liquidity, because the need for this pair to move to the downside arises as a result of the equal low that it has created here. Can you see? This is a correct equal low. Okay, this pair cannot make significant push to the upside until this equal low is taken to the downside, because a lot of order reside here. Institutional order are here. Okay, stop losses, everything, they are all here. So this market need to break down to take that low. Just as this liquidity here, this trend line here, it must be taken from here. We look for sell opportunity to the downside. But you can see that at this level, even whatever it wants to do, it's the pressure to the upside is not there. Can you see 3 months of trading? Can you see what's happening? You see rejection, indecision. This is a month of July. Then you have June indecision. You have May rejection from the top, rejection. So that is telling me that even if we are not going to make a move to the downside, we are going to make some correction in based on what we are seeing on monthly time frame. And we'll begin to see the evidence on weekly. On weekly time frame, we are beginning to see the evidence that we may be in for correction. Okay, we may be in for correction. And remember that just yesterday, the Reserve Bank of New Zealand increased their interest rate from 2% to 2.5%. They increased it with 50 basis points just yesterday, or today rather, at 3 a.m. My time, it was increased. So with that, of course, both Australia and New Zealand right now are not finding it funny, because inflation is biting hard. But what is still making the economy to run well is because some of these economy, are very rich in commodity. All right, they are very rich in commodity. They export a lot. They export a lot of gold, a lot of solid minerals to China. All right. So, and of course, in period of risk-off environment, we are going to have a lot of commodity boom. Right now in Canada, unemployment rate is at the lowest. Canada, unemployment rate is at the lowest. I think the unemployment rate right now is just 3.something%, 3.2%. Okay, is the lowest for several years past. Do you understand? So what is the difference? What has helped? Even though inflation rate in Canada is climbing higher, you should expect it. When the income level of the people rise, okay, you should expect that inflation will come, okay, because there is excess supply of of the currency outside there. Okay, that's what is fueling inflation. But of course, the economy of Canada is being helped. This is just a little digression before I forget, guys, because we are discussing AUD NZD. The economy of Canada is being helped by a lot of gain, they made from crude oil export. You can see that for like 3 to 4 to 5 years back, crude oil has never climbed up to above $100 per barrel, but it hit $120 per barrel. And these guys, this country, they made a lot of money from it. They are not like an economy like Nigeria that produce a lot of crude oil, but have to import petroleum products. So the gain they are making from exportation of crude oil, they are pumping it back to importation of what? Of processed petroleum products. Do you understand? But for a country like Canada, they export crude oil, they bring in the dollar, all right, and then they add value. They process the crude they have for their local consumption. So they are making profit in both ways. But some of these developing economy are not finding it easy, even with the oil boom, because they've got to import refined products. That is a problem. Okay, so let's go back to Aussie, New Zealand. So we're expecting a bit of consolidation around this level before we have a possible push to the upside, maybe last push before the fall. That's weekly time frame. Let's look at the daily time frame and let's see if we can get an opportunity. All right. So for people who trade a pattern they call head and shoulder, they'll be looking at this one as head and shoulder. When the time permits, I'm going to tell you the psychology behind the formation of this pattern. I will tell you. It is important, it is called head and shoulder, but we don't call it head and shoulder. All right, we look at it the way it is, but the psychology behind the formation, I will tell you some other time so that we can have time to look at some other, peers. Okay, so right now, I told you that we are beginning to see evidence of that move to the downside. That either change of direction to the downside or corrective structure. I told you we are expecting bigger corrective structure, maybe up and then down, because right now the feelings in Australia is the same feeling with New Zealand. They are both experiencing inflation explosion right now. Both of them are increasing interest rates, and the differential may not be so much as to create a massive move, in the currency called AUD NZD. But you might have to just experience consolidation, because right now AUD is far stronger than NZD. That's why you see this corrective structure. Of course, when we're here, I made that forecast that this market is going to move to the upside. because you have a clear three-wave structure in the middle, and then you have the boom to the upside. But we've got to try to measure if we have equal leg between this move here and then the other move here. Can you see that we don't have equal leg already? What did I tell you before? Trend line liquidity. We are likely to come to inside this circle. Okay, when we went to monthly, I show you trend line liquidity. Can you see? This is where I project that we are coming. This is a trend line. This is the beginning of the trend line. I told you we are coming here. So you can see that it's beginning to make sense when we came down to daily time frame. Okay, when we came down to daily time frame, because if you measure the leg here and take it to this one, you can see you are having 100% right at this level. Okay, so which means that everything that is going to happen at this level is going to be a corrective structure. Okay, it's going to be a corrective structure. So how do we capitalize on this corrective structure to the downside? Okay, how do we capitalize on it? This is weekly. All right, you already have this massive move. You see this indecision candle. Okay, you see this massive rejection and engulfing candle. It makes a lot of statements. Okay, so all we've got to do now is to go to daily and see what's happening there. Okay, go to daily. So you see this move to the downside. I want to see this move as a serious move to the downside. After you see this candlestick here, right here, you see another one, guys. You see another one, massive one to the downside. They are not, you know, they are not a little candle. They are big, big candles. Okay, so you can see the speed. That's how to know impulse. Only two candles make this down move. Is that okay? Then to do a retracement, how many candles? And it only retraced half of it. So how many candles? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 candles. Can you see? So it took only 2 days to make a move to the downside. But equivalent move, half of the move cannot even be made in 18 days of trading. That is the true definition of correction. So it means that everything that is happening here is not a continuation move to the upside, but a rather, you know, rather corrective move. Do we understand now? It is a corrective move. So if we know that it is a corrective move, then what is the right thing for us to do? The first thing for us to do is that we want to measure this impulse to the downside. Okay, you want to see where is your 50 to 61.8. This is 50, and then this is 61.8, and then this is 78. I just like to mark this 3 this way, this 78. Then after marking it this way, you cannot see, you know, the corrective structure that has been developed here. You can't see it. All right, you can't see it. You have to go back to 1 hour and define the nature of the corrective structure. Okay, you have to define it. So you can see that here you have a 3-wave structure this way to the upside, 1, 2, and 3. Then you have another big 3 waves. This is a very simple one for us to understand, very tricky. This is what is called a complex big correction. Okay, 1, 2, 3, up, A, 1, 2, 3, boom, C. Can you see? This is A, 1, 2, 3, B, and C. That is X. Do you understand? So we are seeing here 3 waves up, which is W, 3 waves down, which is X. What are we expecting right now? We're expecting another 3 waves up, 1, 2, and 3. And by the time these 3 waves up is done, it will have hit the level of 50 to 61.8. But of course, you know that whenever we are having a WXY with a bigger X in the middle, you are likely going to have a you know, corrective structure hitting 78% fib retracement. Do you understand? So don't expect that this market is going to just stop at 50 to 61.8. Don't expect it to stop here. No, it won't stop here. Why? Because we are having a bigger structure. A bigger structure will retrace to the level that Zigzag will get to. A bigger structure will retrace to the level where, a level where expanding flat will get to. That is the same thing you are noticing here. So the three waves that you see in W here, we want to see the equivalent three waves in Y here. So that at this level, when you have Y, guys, this is a high probability trade to the downside. I'm also keeping watch on it. High probability trade to the downside. Okay. So now what do I have to do here? All right. For me not to miss out this trade, I'm not going to put alert at exactly this level, because I believe this pair should break this level to the upside for it to make structural sense. So what I would do is to put alert at 1.1126, alert at 1.1126, so that when the price get to that level, I will get alert. I will be notified. Okay, I'll be notified. And when it gets here, where's your stop loss, guys? Your stop loss is just above the level of the impulse. That's your stop loss. Our stop loss is going to be like 11 from 1126 to 1172. Going to be about 40 something pips. All right, it's going to be a very big risk to reward trade setup, because minimally I expect it to get to this level. Okay, expect it to get to like this level, this low here, 0830, then 11. That's about 300 and something pips to the downside. Okay, so that is AUD NZD. Let's look at GBP card. Okay, GBP card. I'm looking at some opportunity on GBP card. Can you see that GBP card is on its way to the downside, and can confirm to you that this pair has 80 to 90% chance of continuing to the downside. Why do I say so? And it's actually in line with the technical, setup on a daily time frame: impulse, correction, and continuation. Okay, this technical analysis that I've just showed you in monthly time frame is in line with the present reality of fundamental between GBP and CAD, because of course both of them are hiking rates. Okay, both of them are maintaining a tight monetary policy right now. A tight monetary policy is a type of monetary policy where monetary authority has to find a way of reducing money supply. Okay, they find a way of reducing money supply. A popular method, of tightening monetary policy right now is by increasing interest rates. When you increase interest rate, you reduce business capacity to borrow money for business expansion. That's just the downside of using instrumentality of interest rates to control inflation. Okay, and then another thing you can do to ensure a tight monetary policy is by increasing taxes. Okay, you increase taxes. It is not fashionable again, because I will tell you that increasing taxes is the responsibility of fiscal authority. We have monetary authority, we have fiscal authority. Monetary authority is the central bank of any country, like European Central Bank for Europe. You have the Reserve Bank of Australia for Australia. You have Swiss National Bank for Switzerland, and so on and so forth. But fiscal authority has to do with the executive. What is the finance minister doing? Okay, if finance minister brings a policy in order to to reduce money supply, okay, the kind of policy they can bring is the one that they are in control of, and they are in control of tax policy. They can decide to say, oh, there is excess money in circulation, and there is inflation, so we are increasing tax. So when they increase tax and then increase in tax, will reduce what is called disposable income. The income level that is available to be spent for expenditure will drop. But I can tell you, most finance ministers all over the world will not increase tax. They won't, because why? They want to win the next election. So if they impose higher tax on the electorate, they are not going to vote for them. So that is why most economies have jettisoned the use of tax increase to reduce money supply. Instead, what they like, what the fiscal authorities, the finance ministers, the president, the prime ministers, what they like to do is to carry out expansionary, fiscal policy. They reduce tax. When they reduce tax, there is increase in disposable income that people will spend on one thing or the other. And before you know it, because their interest is they want to spur the economy to action. They want the economy to produce the more. They want to increase the level. They want to raise the production level in the economy. And when they are able to raise production level in the economy, it translates to reduction in unemployment rate, as is happening right now in Canada. Unemployment rate is dropping. Most people are employed right now in Canada. And because of that, every household has massive disposable income to spend. And that is what is pushing inflation to the roof. Do you understand now? So right now in Canada, we are expecting an increase in interest rates in order to arrest the current inflation figure. Of course, you know that Great Britain pounds has also increased their own rates, but over a long period of time, it is more sustainable to buy card right now than to buy GBP. Why is it more advisable to buy card right now than to buy GBP? Because card has a commodity right now that is in vogue, that is able to support the economy, and which is crude oil. They have it, all right? They have it in larger quantity and is able to support their economy, okay? And then they are less affected. They are less affected by the Russia-Ukraine crisis. But of course, Britain is in Europe. Britain is more affected by Russia-Ukraine crisis, okay? They are more affected. And the unemployment rate in Britain is higher than what you see in Canada. So a lot of fundamentals is better with card than with GBP. Therefore, it will not be out of place for us to think that this impulsive leg to the downside you see here, you are going to see it here. Because if card is strengthened and GBP is weakened, it means that we are going to have a sell of GBP card. Is that okay now? So that is monthly, is in favor of the existing fundamental between the two currency. Then you have a weekly. Of course, you see that no trader in his right senses will begin to look for sell opportunity at this level. What happened when the pair was here? Why didn't you sell here? Why must you be selling here? Even if I see a very clean setup at this level, it is not right to sell because it's not going to give you a big push to the upside. Therefore, you need a corrective structure. You need a corrective structure here, okay, that will take you to the downside. If that corrective structure does not appear, then you have no trade setup, okay, on GBP card. Then on daily time frame, let's see if we are beginning to see the formation of the corrective structure. So when you see a structure like this that look like an ending structure, the first test you carry out on it is divergent test. You want to carry out a divergent test whether this low here, as it's lower than this low, whether in on the indicator we are going to see a higher low. Let's just go and do divergent test on this. Can you see? Divergence is clearly there. Can you see? Can you see? Very simple. This low is lower than this. This low is lower than this. But of course, when you come to this side, this low here is higher than this low. And this low is higher than this low. That means this wave to the upside is going to come. It's going to come. When the momentum will be there for it to come is what we don't know. But that it will not come, no way it will come, because we have a test. When you go to the hospital and you say you have fever, all right, apart from your blood sample that will be taken, doctor will also want to check your temperature. They put a thermometer to check your temperature. In analyzing financial market, we also have instruments that we use to test, the validity of a setup. And one of the instruments is the correct application of divergence. Right now, with this use of divergence, I have seen that momentum to the downside is dying off right here in this pair. Right now, we are having momentum to the upside as indicated by the divergence, all right, on the RSI. And then you can see that on this daily time frame, your stochastic has reset to the low. Okay, with stochastic reset to the low, and then there's divergence. So all we are waiting for right now is buying pressure. We want to see a buy pressure. Right now, there's no buy pressure. Though yesterday we had indecision day, because all the major trading sessions that we have yesterday ended up with an indecision candle. All right. And then even the momentum today is not still there. You can't rely on this for any setup, guys. We can't. It's not possible. It's not going to work, guys. Okay, we can't rely on this for any setup. So what do we do now? Since we cannot rely on this, we need to wait. If another candle form this way, we need to wait. If another candle form this way, we need to wait. If maybe by next week we now have a boom candle here that form this way, yes, we know that, oh, we have a forecast that we need a wave from here to the upside, and now we have seen a massive buy pressure to indicate the origin of that wave to the upside. So what we have to do, if we see this on a daily time frame, is just to bring down the pair to 1 hour time frame. Okay, and on 1 hour time frame, you want to take a fib of this impulse, because the engulfing candlestick pattern that you see on a daily time frame is going to create an impulsive wave on 1 hour time frame. That's why I use 1 hour. You will see a very clean impulse on 1 hour. All you have to do is to find the retracement, define the correction. Of course, you know the rules. Define the corrective structure. If it is zigzag, just mark your 78% retracement. If it is maybe a simple 3-wave structure like flat, just come to maybe regular flat, just come to 50 or 61.8. At times 38 may be good, but I love it to come to 50 to 61.8. And then if it is expanding flat rather, it will come to 78% fib retracement. At this level, that's your hot zone for the buy to the upside. So these have carried out clinical analysis, thorough analysis, undiluted analysis of GBP CHF, GBP CAD, and then AUD NZD. All right. So I don't know if any of you have any pair you want us to analyze, so that I don't make the video to be too long. Is there any pair you want us to analyze? Is there any pair you want us to analyze?
Yeah. Can you have a look at CHF JPY, please?
All right, CHF JPY. CHF JPY. Good. Correct. It's coming to the zone. Gradually, it's coming to the zone. I've marked the level down. It's coming there. But nevertheless, let's start from higher time frame. Let's see what's going on in higher time frame. All right, higher time frame. Okay, let's go and check IDC to get a better data. IDC, correct. I encourage all of you, always use IDC when you are on higher time frame, but lower time frame you can use anyone. IDC will give you a better data. Okay, so you see on this higher time frame, this pair has overbought. Honestly, it is due for a sell-off, because you see the whole of this move, guys, is a 3 waves impulse. 1, 2, 3. Some of you were arguing in the group, in our group the other time, whether a week should be taken as part of the structure. In as much as price was there before, it becomes part of the structure. So right now, if you look at this pair, it has made a 3 waves structure to the downside, 1, 2, and 3. It has made a 3 waves back, 1, 2, and 3 with elongated C. Okay, and if you take a fib of this impulse to the downside, you know, I keep saying it, even if you're a scalper, you need to know the main direction of the market so that you know where you are scalping towards. That is the beauty of understanding higher time frame analysis as a scalper. You know that the flow of the market, if you know it is down, is bearish, your scalping inclination will always be bearish. Do you get now? And in that way, you will not be caught off guard. Okay, this is a zigzag corrective structure and it's almost getting to 78% fib retracement. Can you see? It's almost getting here. It's a question of time, guys. It will get there. It can still get there. Let's just mark it. Let's mark it, guys. All right. So let's take this away. Weekly. Remember, we still have some little room to the upside, but I can tell you that if you don't look at monthly time frame, you are not going to get this understanding. Okay, weekly is still bullish. It's still bullish. Even though we saw this, guys, I was tempted to want to sell. I even sold until I closed it with 36 pips loss. I'm not interested. When you see these guys, you want to believe that this move to the downside is ready. But looking at monthly time frame, guys, and looking at 78% retracement, still a little bit above this present price level, we still believe that a little corrective structure can form here for this market to push to the upside. And of course, if you check other JPY pairs, they have room to the upside. So if other JPY pairs have room to the upside, why do you think that CHF JPY will not also make a move to the upside? That's how I want us to look at it. So even if we give a sell setup here, we've got to be careful because other JPY pairs are moving to the upside. Okay, now let's go to daily. So if you go to daily time frame, at the initial point, I was looking at this to be, you know, the beginning, the leading impulse. I was looking for like correction and then move to the downside. But after checking this pair on a monthly, I have a different opinion that there is possibility of us having this impulse being corrected here, another impulse, and a push up to the upside to hit the weekly, the monthly structural level. This is one possibility. Another possibility is that this might just be a corrective structure that is enough to push this pair to the upside. So how are we going to know that this is the corrective structure that will push this pair to the upside? Number one, we need to find out the fib of this leg. We need to find out the fib of this leg. Here, that's where the impulse ended. You can see that it made a shallow retracement. It didn't get to 50%. If this pair has gotten to 50%, I would say, well, it might be going up like this to the upside, but it didn't get there. But that is not an issue. What we need to check again is that if this move to the upside is big enough, okay, you know, it has already engulfed the previous bearish move. If we still keep on going and it closed bullish today, good. We can check out something. We can go to 1 hour time frame and look for impulse that this massive move created, and then we look at the corrective structure. If you give us a clean corrective structure, guys, we have to buy it to the upside without any fear. Because monthly is telling us that we have room to the upside. Weekly is telling us that we have room to the upside. Then we have a setup at close to demand area on a daily time frame. Why won't we take it? We take it, and in that case, it's going to be a short trade to the upside. And in that case, you see this leg here, which is A here, B here. As soon as it makes equal leg here, you close your trade, because this could just be A, B here, and then C here. So if you don't close your trade, you will lose it. So if it make a three-wave structure here, we have to watch demand level here again and see possibility of this pushing to the upside. So that is how I want to look at CHF JPY. Mark, do you get what I do?
Yep, perfectly.
Okay.
Thank you. Thank you.
Okay. So that's how I want to look at it. AUD, somebody say AUD, USD. We have just 3 because of time. Please don't make any further requests. Please. Because of time, I don't want this video to be too long. Somebody say AUD, USD, Euro JPY, USD CAD. I'm just going to be fast about it. You know, Euro JPY. Where's the Euro? Yeah, Euro JPY. Okay, so monthly, we have done this before. This is zigzag corrective structure. It has made a perfect equal legs. All right, that's number 1. That's the only thing you've got to check when you're on higher time frame. And then you need to check the retracement of this impulse exactly at 78. So this pair is close to coming down than CHF JPY. Another thing I want you to check is this. Okay, that's what is called contracting flat. Okay, this is a contract. This could be a contracting flat. Yes. And if this is a contracting flat, it then means that this pair is behaving like other JPY pair, impulse. Okay, contracting flat in the middle, which is the correction. And then you have another impulse. Boom. Okay, and I told you that whenever you are having a correction, equal leg of that correction is more important than fib retracement. Equal leg of these two is more important than the fib retracement of this move. Is somebody getting it? Just know that for sure. Don't say you have measured 61.8. No. If equal leg is going to even cross 78, it has to cross it because it is equal leg. So this is what is called a contracting flat. Okay, it's not popular and it's not common, but it does exist. Okay, so if this is a contracting flat, expect Euro JPY to continue to move to the upside. On a weekly, I want to support the contracting flat, you know, of this structure because other JPY pairs have a little more upside to go. Okay, so right now it's making a corrective structure in weekly. This is just part of the corrective structure. We need it to finish developing. If you go and check the divergence of this move from this level to this level, you are going to see that you will see a divergence. It's possible. If you don't see a divergence, that even support our analysis, guys. On weekly, support our analysis. Higher high here, higher high here. So there's no divergence. What does it mean? It means that on a weekly time frame, we are just seeing a corrective structure for another move to the upside because no divergence. Higher high here, higher high on the indicator. No divergence. Daily. Okay, daily. So in daily time frame, all these are just part of the corrective structure. Okay, so you have this corrective structure, a regular flat. Okay, so all we are waiting for here, because this downside may not come now, it is not supported now, even though on the fundamental point of view, Euro should sell. All right, Euro should sell. But of course, you also know that JPY also have a negative interest rate. But why I will not want to sell off JPY anyhow is because of their trade balance. You know, I showed you some things in the group the other time. They went into massive, you know, asset purchasing. Anywhere they see, they kept acquiring. That was what worked for them. So all this, and because of their negative interest rate, there is massive, you know, investment in their country because it's cheaper to borrow fund, to get fund in Japan to expand your business. So based on these guys, there is massive expansion. They don't tighten their monetary policy. They lose it. They have a loose one. Make money available for the people to invest. A negative interest rate of -1. So because of that, they have a soaring trade balance. Their trading balance is big. Their current account is big. So right now, what we want to capitalize on this corrective structure on the daily is that if you take the fib of this leg to the upside, you see that right now is between 50 to 61.8, which is good. It's good. That's what we want. Then, but right now we don't have a buy pressure to, you know, to begin to look for buy opportunity to the upside. Where is example of a buy pressure, guys? This is an example of a buy pressure. If you see this kind of candle at your structural level, then you know that a move to the upside is imminent. If we see this here, just as we saw in GBP CHF, okay, can you see massive candle? This is a buy pressure, engulf the previous candle. Down candle, indecision, boom. Some people will say this is a evening morning star. I don't know what to call it. What's important for me there is this indecision candle and this boom to the upside. That's a buy pressure. Okay, getting back to Euro. So we need to see this on daily time frame. When it totally engulf all this, then we'll go to 1 hour time frame or whatever time frame that's convenient for you. Look for the kind of corrective structure that will take you to the structural level, and then you buy to the upside. And when you are buying to the upside, your target, okay, your target will be based on the daily corrective structure. Of course, you know I trade this daily so much. Okay, it's going to clear this level before anything can happen, guys. So once you have a move and break this previous high on 1 hour time frame, just move your trade to break even and allow it to move to the upside. Is that okay now? That is a Euro JPY. Then USD card. Of course, you know that I've told you that we're expecting an increase in interest rates. You know, we're expecting CAD to be Bank of Canada to be hawkish in nature. They are going to be the most hawkish bank, you know, CBN. That's what it will be if they make their rates to go up by 75 basis points. That's what we are looking at. You know, we're expecting it to be 2.5 or 3% right now. It's going to be very big. All right. So if that is the case, then expect strength in CAD. You know, expect strength in CAD. And if CAD strengthen, guys, as a result of that policy, expect USD CAD to go down. Okay. And of course, you see that what we have just said reflects the technical analysis that's presented before us, because you cannot have a pair that have been going up and down for quite a long period of time to continue to go like that to the upside. It has to find a way to break down to the downside, pick a lot of liquidity, re-engineer itself to the upside. Do you understand what I'm saying? It cannot move to the upside like this. So we are looking for a comfortable sell-off to the downside to break this low. Okay, I just taught you what is called trend line liquidity. You're going to see another trend line liquidity here. Where does it start from? Right here, guys. Right here, guys. So go and note it down. We are going to see possibility of USD CAD making this move to the downside to get to this level. And in that case, if it happens like that, it means that what we have just achieved is, an impulse, then three-wave structure to the upside. Where is the three-wave structure, guys? 1, 1, 2, and 3. Can you see? A, B, C here. And then you have this move to the downside. Okay? I want to do it the right way for you. Just hold on. I want to cut the wave the right way. Okay? So right now, you have three-wave structure here. 1, 2, 3. That's clear one. Then you have a wave up here. You have another wave up here. So this is a complex B structure in the middle, which is this is A. Okay, this is B, and this is C. Is that okay now? Okay. So now what's the next thing that we have to do? Okay, then you have this move right here. You have this move down right here. Then you have the similar move down right here. So this has become a complete structure. This is A. This is 1, 2, and 3. Three-wave structure. That becomes B, and this is C. Can you see? This is a complex structure in the middle. So what do you have next? You have this wave to the upside here, and you have this wave to the upside here. And then what is the next thing? This in itself has become a three-wave structure. But I would like a situation where I have something like this. Watch me, guys. I would like a situation where this is a corrective structure and this push up, so that it will be of equal length with this one. This wave and this wave will be equal. And in that case, you now have a big A here, a big B here. Sorry, guys. Excuse me. A big B here, A, B, and C. B here, still correct. And then you have C here. So that will be a complete corrective structure for this wave down. Okay? And then from here, you now have a move to the upside. Clean, guys. This is what I want to see. But I think the rate decision is coming today. There may not be opportunity for that. But another thing that can happen is that as soon as the rate is mentioned, this market can just flip to the upside and immediately come down. That's a situation where you see a pair will just make a move, respond to the policy statement. All right, respond to it, complete the structure, and flush down. Okay, but I don't trade fundamental news, but I like to see what happens after the news. But right now, I have not seen enough sell pressure to begin to look for sell opportunity in this market. Because look at it here. Look at it here, guys. Look at it here, this correction. Just show me the biggest candle here. Is it a buy or a sell? The biggest candle here is a buy. So that's why you must be careful with your sell, because you have more buyers than sellers. Sellers are coming little by little. When buyers come, they come big. So you should be careful. That's what I look at. I look at sell pressure, buy pressure before I take a decision. So right now, I don't have any setup on USD card. Then I think the final one that was mentioned, EURJPY, USD card, AUD USD. Okay. You know, I did in my weekly outlook last week, I told you, I made it very clear that this wave is going to come. This wave is going to come. Okay. This market is going to move to the downside and this wave is going to come. So why do I think so? This is a simple WXY structure, guys, on a daily time frame. I don't need to go far before I get what I'm looking for. First and foremost, you must look at it clearly that this is an impulse, a positive move to the upside that must be retraced to 50 to 61.8. And if we measure it this way, you see that the retracement to 50 to 61.8 is not done, because this is a zigzag corrective structure that is meant to hit 78% retracement. So how do I conclude that this retracement on a daily is a zigzag corrective structure? What may do it? This is a three-wave structure to the downside. Okay, keep this one. This is a regular flat, expanded flat in the middle in form of WXY. And then what are you expecting, guys? You are expecting another three-wave structure to the downside, three-wave structure to the downside to hit above 78. We are going to calculate the equal legs right now. But the kind of projection I'm looking at for this three-wave structure to the downside is having an impulse here, impulsive leg here, and having an expanded flat here, and then have a move to the downside to hit 78. This is what I'm looking for. Simple. This is what I'm looking for, guys. It's even 60, 68, but it may likely push below. Okay. So if we take, if we carry out equal leg test for this, you see that equal leg is coming to this level. So you may just break this level, come to this 123, and then you start a massive move to the upside. Can you see? Can you see? Let me show you. Can you see? So this is what I'm looking at. So for now, can we capitalize on this wave to the upside? It's very risky because it is counter trending, but we can. Yes, we can. And how do we do it? Right now, the flow is still to the downside. The flow is still to the downside. That is why, how do you know that the flow is still to the downside? When you put out your RSI, you will see that right here, your RSI is below 50. Okay? RSI right here is below 50. That shows that the volume and the momentum of this market is to the downside. And you cannot begin to look for a buy opportunity most time in a market that has its volume to the downside. Can you see? So what I want to see right now, can you see that right here, when you had an engulfing here, go and check your indicator. Check your indicator. Even with the engulfing candlestick pattern, the indicator is still showing you that the momentum is to the downside. So we cannot look for buy opportunity when momentum is to the downside. And what do you see? The system, my system is telling me that I'm not looking for retracement of this market to buy. Why? RSI is telling me that momentum is to the downside. And what do you see thereafter? Boom, to the downside. The same thing is applicable right now, right here. The momentum is to the downside. We cannot begin to look for a buy opportunity, even though we want a buy opportunity to the upside. But the only thing that can happen is if we have a boom here, right here, to the upside, and we see RSI come far above 50. Yes, we know that, oh, we are going to complete this structure. All you have to do in this case is to drop this pair, drop this to 1 hour time frame, get a correction, and push the market to the right structural level here. When you get to this top here, take your profit and look for sell opportunity to the downside. But right now, guys, there is no buy setup for AUD USD. Don't tell me it is buying. Yes, it is buying. It is buying, but there's no buy setup. It is buying, no buy setup. Why? The volume is to the downside. And let me prove it to you. If you go to 1 hour time frame, this move you see here can be an impulse. Okay, this move here can be an impulse. Can be an impulse that is corrected by three-wave structure, and then you have a move to the downside. So can you see the flow is still to the upside? And then when the momentum shifts in the higher time frame, you are going to see that this move here is going to break this structure. The structure is broken. Okay, and then you look for a corrective structure, you take a buy to the upside. You see, the system is very clean and clear, understandable. All right, and if I follow it rightly, I don't miss it. It is only when I follow it wrongly that I get punished. And that is why I want to make sure that at every point in time, I try my best to follow the system as it is drawn. And I also try my best to maintain a very clear, risk management strategy. Is that okay, guys? Okay, so I think we have done justice to all the pair. Is there any other thing? No other thing. All right, so I want to call it a day at this level. Thank you all for coming. I will upload the video in YouTube so that if you still want to watch what we have done, you can still watch it. All right, see you next time. Bye.